Hello and welcome to my video on what I believe at least is the most reliable day trading volume indicator for Forex. Now, I should preface this with a little explanation. We do not actually have volume in Forex. We have tick volume, which is the amount of, like orders pushing ticks back and forth, pips or whatever. But that's not the same as saying, okay, well, 20,000 contracts came in at such and such time and such price. Since we don't have a centralized exchange, we don't have that advantage. But your broker can keep track of the volume coming into them, and the aggregate supply demand should reflect true volume close enough. So it's not really as reliable as it is in the stock markets or the future market, but that doesn't mean that it's not useful. And I use on balance volume. And what this shows is the rapidity, the speed, if you will, of ticks flying in and out of a contract. So as money flows in, ticks move faster, and the on balance volume starts to add up. So to use this indicator, you click on Indicators, Volumes, On Balance Volume, and it opens up in a secondary window. Now, this is not a directional indicator. So here's a pretty relatively high spike, if you will. It's pretty high on the chart, and you can see that the Chinese yuan, the dollar yuan, formed a shooting star here on the 15-minute chart, which in and of itself is a relatively negative candlestick formation after a surge higher. So what this tells you at this point is something's going on. You kind of have to keep your eyes open. And you can see that we did, in fact, drift a little lower and then just collapsed at this point. So volume dropped out. They tried to push it up, and then as they started to lose money, they just got out, and volume dries up and we drop. Now, it doesn't have to be, this doesn't tell you that it has to go lower, nor does this tell you that it has to go higher. This just tells you that something should be paid attention to. With that being the case, you look for extremes, but you also look for, again, candlestick patterns. This is a secondary indicator. You can't just go in and say, okay, well, this is rising, I should be a buyer. You can see that it may have worked there kind of, but not really. You got a pretty nasty whipsaw, and you'll notice how this isn't as low as this. So again, you can't use it by itself, nor was it predictive of this. I mean, it was kind of high, but once you started to see it, you see volume flowing out of the market. The buyers are running, and we just drifted lower. Think of it as confirmation more than anything else. You find a shooting star, you find a bearish reversal pattern, you find a hammer, you see something, and then all of a sudden you see a spike in volume and it goes straight up in the air. Then it's something worth paying attention to. Otherwise, one thing that it can do is if you get a signal that looks very bearish, it can tell you when it's time to perhaps exit. Now, as you can see, it was at extreme lows here, and you got this shooting star here, and it basically told you that there probably wasn't much going. Now, would it have worked? Yes, but it's not the big move that you're trying for as a day trader. This was only a handful of pips. So play around with the on balance volume. I find it very useful. I find it's probably just as useful as keeping me out of trades as it is getting me in.